What has investor behavior data shown on this front? And is there anything in particular that has just amazed you?
Yeah, for sure. So, as I mentioned, we at State Street, we collect a lot of proprietary information. What we're probably best known for within the team that I'm on is that investor behavior. So, State Street has 50 trillion of assets under management, and we could actually see where the flows and holdings, the buying, selling, and positioning of these broad asset classes are moving. And within that, we've kind of divided it into the institutional investor. We call it real money. So kind of that professional investor that is a little bit slower to facilitate whatever investment thing they want, but one that once they start to commit to that, it takes them a while. And the one thing that has been really amazing to me to watch is since mid-April of 2025, the real money investor has been engaged in the asset markets and the risk markets in a way that we really haven't seen since the GFC. So they absolutely did not flinch. There were certainly periods where there might have been a little bit of a sell down in terms of risk assets, and we have various ways of measuring risk, and I'm happy to talk about it offline with you. But they used it as an opportunity to buy the risk. And one of our indicators that we look at is right now sitting at a plus 10. By frame of reference, plus 10 is pretty solid risk taking. Probably the best that we've seen over the course of the last couple of years has been plus 14. So despite the fact that we're in the conflict that no one really expected, look at what oil prices did, they have remained engaged in it, even though overall their positioning risk is quite robust given how much they've bought over the last year. But kind of within that, there are a lot of threads to figure out. One is that the idea that there's a de-dollarization, the loss of dollar hegemony was something that foreign investors in particular were spending their time on. Well, they have been buying US equity assets at a clip that the price action shows. You've seen it now, but we've been watching this over the course of the last year and a half. There is no hesitation to buy US assets. But the assets that they're buying is much more narrow. So it definitely is equity focused. It definitely is tech focused. So everyone in the world is a U.S. tech investors these days. And what they're taking away from is their approach to Treasuries. So our data is also showing that there is very, I'll say historically low interest in Treasury duration right now. And again, the way the curve has traded, it has absolutely made its way into the price action, but that's ultimately a theme that I think that we need to think through and take into our investment thesis as we get to, potentially the next regime or the next part of this cycle, is how Treasury securities and, really the need to finance all of the debt that we have here is at the moment facilitating a hesitancy within both domestic and foreign investors kind of within that market. But overall, they are engaged in risk. And if anything, what we've seen over the course of the last 6 months is that a lot of the belief that we were going to see a rotation into other international markets didn't really happen to the degree that a lot of the press at least was writing about it. Has come back to the US, and kind of that US buying is about as strong as we've seen, much narrower though.